right, good morning and good afternoon. So we're going to be reviewing the trade for BTC, which is Bitcoin. So, and we're also going to be talking about the importance of following a made out plan, your plan, why it is important for you to follow your plan. All right. So, for Bitcoin, this was our joint liquidity, this low and this relatively called lows here. This was our joint liquidity. Now, when we understand that price is in fact seeking these lows here, we go into the market seeking bearishness, meaning order flow should be bearish, meaning premium PDRAs should be resisting price from going higher and discounted PDRAs should be violated and used as inversion levels. Does that make sense? Now I'm going to reveal the lipsticks for this. So this will be a quick and direct one. So this was our joint liquidity here. This sells our liquidity pool and this sells our liquidity pool because we already understood that during Wednesday's trading, price rallied higher to neutralize these buy stops here. There are buy stops orders resting above these clean highs here, which is buy side liquidity. So when price traded higher here, smart money paired their sell orders with this resting buy side liquidity and then drop lower. This drop lower, this expansion link lower is the market tipping its hand towards that price is in fact seeking this lows and this lows here. Now I'm going to so on Saturday during the London session, this is my X, which is Twitter. So on Saturday during the London session, we this was the inner dialogue. Our first target is 79,939.90 and ultimately 76,606 and below. Proper risk management will be applied. Now, this was the screenshot that was taken. So we understood that these dotted lines here, these dotted lines, these are this is an imbalance from for BTC, and this is also an imbalance, but there are volume imbalances. So that is that. But we're not going to discuss volume imbalances here in this particular video. So price has already taken out buy side liquidity and then drop lower, meaning we would want to see price trade from this imbalance here and trade lower to this sell side liquidity target, which is the reason for this icon here being placed here. So we are seeking bearishness in price and want to see a quick and decisive bearishness in price because it will bring in sellers at a lower price, and these sellers that will be coming at a lower price, they will be used to cover up smart money sell orders that has been riding from 90K and below, that has been riding from this buy side liquidity also and below. So we want to see a quick and decisive bearishness in drop in price, bringing in sellers at a lower price. They would be selling when price comes below these lows, while smart money will be covering up their orders. They'll be using those smart money orders and this sell side liquidity resting below this low, and also below this lows as a counterparty to their order, to their trade position. Now back to today's topic. Now for for the actual trade, the actual business, I'm going to drop down lower to the 15 minutes because the 15 minutes was a clear indication on how to work with this. Now, so we have this price action here on the 15 minutes. So we're going to make this a full screen. So we've already had a touch of this volume imbalance here. This is the volume imbalance low, and this is the volume imbalance high. Now, when price touched this volume imbalance low and then dropped lower, price came higher here on Fridays during the afternoon session and rejected from this rejection block. The up close, the highest up close candle from this swing point, you draw that out in time, that is a rejection block. Now, when we have this rejection from this candle, as you can see, price is failing to trade to have multiple closes above this imbalance here, meaning we are seeing an indication of bearishness in price action. Then price consolidated inside of this imbalance here, filling this imbalance, making this a balanced price range because we have offered sell side delivery and also buy side delivery, meaning this right here is a balanced price range. So because we have this as a balanced price range, we do not want to see price violate it above because we are seeking premium PDRA to act as resistance, resisting price from going higher. This volume imbalance is a premium PDRA, the rejection block is a premium PDRA, and this imbalance here is a premium PDRA when we already had this drop in price. If you take your fib from this high to this low, around here is the equilibrium, and everything above equilibrium is premium. So all of this is in a premium. So because the market is in a premium and you're expecting lower prices, you are seeking to sell at that premium and cover up your sell position at the discount. Now, if you miss this rejection block entry during Friday's trading, seeking to cover up here and also at our John liquidity, which is 79,000 and also 77,000, sorry, 70, yes, 77,000 and below. So price consolidated back and forth and then drop lower. Doing this job, this imbalance was left in price action. So we draw this imbalance out in time. We'd want to see this imbalance act as a resistance, resisting price from going higher. So we are to indicate the high of the fair value gap, the midpoint of the fair value gap, and the low of this fair value gap, which is what is being outlined here, which is also inside of a balanced price range. So as you can see, we have multiple confirmation, multiple PDRAs supporting the idea of a bearishness in price, supporting the idea of a bearish order flow. Now, at during the London session, we had the midnight opening price here on Saturday's trading. So on Saturday, price dropped lower and then rallied higher. During this drop lower, it will bring in sellers here. So a couple of traders will be selling and they'll place their order as a swing high or this relative equal highs, thinking this is a strong resistance level. And as you can see, during the London session, price rallied higher to purge out these resting buy stops, resting above this relative equal highs also, and also back to the fair value gap here, which we indicated earlier here during the Friday's trading. We draw that out in time. So price used this fair value gap here, the low of the fair value gap, as a resistance, resisting price from going for higher prices. Now, we would not want to see price trade again above the midpoint of the balance price range. So your invalidation point for these settings is above this swing high, which is around the first quadrant of this balance price range. So you have multiple confirmations supporting your idea for you seeking lower prices. You are trading, selling above midnight, selling at a premium PDRA. Your stop loss is your stop loss above one, two, and this swing point. You have your stop loss placed here, seeking your drawn liquidity. Your first target is this sell side liquidity. Your second target is those other liquidity pools from the higher time frames. But you do not need price to reach your drawn liquidity on the higher time frame for you to be profitable. So we had this when price rallied here, we quickly left this spots here. We quickly left midnight opening above the midnight opening because for when price is in fact bearish, you do not want to spend a lot of time above midnight opening price. So price rallied higher and then dropped lower and left this imbalance here. This imbalance will be used as a reference point by the algorithm at the future time in price. So we have a retracement higher back above midnight opening for Saturday during the Asian session for Saturday's trading. For traders that missed this opportunity, price came back out. Now, if you draw this out in time, this is a bearish order block, the last up close candle here of the candle that pushed out this relative equal highs here. So this is a bearish order block. So if you miss this entry here, when price rallied higher once again for the during the Asian session, you can pyramid your position or you enter your position, which is also the low of this balanced price range. Price is allowed to retrace back to the low of this balanced price range. So price did that here and then drop lower. Then during the London session also for the for Sunday's trading, we have this reference point, this PDRA acting as a premium PDRA now. Because if you take your fib from this high to this low, the midpoint of it is just resting around this fair value gap, around the eye of the fair value gap. So you'd want to see the eye of the fair value gap resist price from going higher to, and price did that. Say price dropped lower, leaving an imbalance here at the then price traded inside of it doing New York session for a retracement, for a New York session retracement, and then price dropped lower. Now price dropped lower ultimately to our first target here and also our other targets here. This is actually our first target, this sell side liquidity pool, which is this relative equal lows and this liquidity pool, which you have sell side liquidity. You have the midpoint of this imbalance. I would employ you to look for where this imbalance is being gotten from. The high of the imbalance is 80,216.01 and the low of the imbalance is 76,900. So I'd employ you to look for where this imbalance is gotten from. It is a higher time frame PDRA. So look from your weekly and your daily to get to an understanding of where that this PDRA, this imbalance is being gotten from. So that is that. And now one more thing, the importance of following your trade plan, your well laid out plan. You see, the world is a very chaotic place. There's a lot of information going around back and forth. And if you do not guard your mind, you would be sucked into this abyss of confusion like the general public. And you do not want that. You want to be clear headed when trading. Anytime you are participating in this market, you'd want to be clear minded when executing. And for you to do that, you have to have a well written out plan that you are going to take when the situation and the opportunity presents itself. This will keep you from self sabotaging and self destructing. So I hope that you take something from that. All right. So this was the execution here. So this is it. So I bought here, wanted to cover up above this relative equal highs and then entered my sell position. But just as price traded above the midnight open, I just collapsed the long position because it is of no use entering a short-term long position to cover up above this relative equal highs when my overall drawn liquidity is the lows. So for that reason, I just covered my positions above the midnight opening and then entered my actual sell position here. So sold from this when price traded to this to the low of this balance price range. So when price traded to the low of the balance price range above midnight opening price during the London session. So you see we have multiple confirmation confirming our trade idea. So we entered our sell position, price dropped lower. I was not because I was seeking lower prices, price rallied higher. Now this is why you do not quickly move your stop loss. My stop loss was placed above this PDRA here, above the balance price range. So for that reason, it is being kept intact because I'm seeking far lower prices. So when price drop lower below this midpoint, below this swing low, I covered up a position here, took out partials from here, and then price dropped lower to this sales and liquidity pool, and I took out the rest of the position here. This is about this a one we should 1 to 3 risk to reward settings, which is in line with my model. So for that reason, I collapsed the final position and price dropped lower to our target lower. Now you do not want to, like I said earlier, for it to be profitable, when you are seeking profitability and not just chasing the money, you'd want to be diligent and watchful with your trade plan and your trade idea. So your already made out plan that you've made earlier before you got into the trade, the reason why you got into the trade, that is how you're going to manage that trade position to keep you from doing something you shouldn't be doing inside of a trade or before you enter a trade. So I hope you got something from this video. I'll talk to you inside of the week, and good luck, good trading.